Hi everyone, it's Paul Brown here from Wealth21. Hope you're all keeping well. We're in the middle of July in this very unusual year of 2020. So I put together an update on the pandemic and the impact on the markets and so on. Firstly, importantly, we have the general disclaimer. Anything in this presentation is just general in nature. If you have any questions relating to your specific situation, please contact us for personal advice or contact a qualified financial advisor for guidance. Very important. Let's look firstly at the pandemic here in Australia. This blue line represents the accumulated cases and of course for many weeks it was quite flat with not very many new cases on a day-to-day basis. But of course, so we've had the outbreak in Victoria and the number of cases has now started increasing again, often over 200 new cases a day in Victoria. The purple line here represents active cases, and that number did decrease well below 500 at one point, but now with the new cases out of Victoria and also the cluster in southwest of Sydney, the number of active cases is now increasing. We have had, unfortunately, 108 people have passed away. Looking next at global data, this is the rolling 7-day average of new cases, and you can see that the United States has a very large number of new cases. There's a color coding here. This is orange for the United States, so it does mean that during the testing, like between 3 and 10% of tests are positive, which is also quite a high number. Although South Africa it is worse, of course. So the other countries on the chart are Brazil, India, with increasing number of new cases. Australia is also on this chart, but in global terms, our number of new cases, of course, is quite small. Let's move to the economy, and this is the Australian unemployment rate. Currently sitting at 7.1%. The expectation or the forecast is showing that the unemployment rate's expected to increase, potentially above 8% over the next couple of months. This is the GDP forecast. We had a small negative 0.3% in the first quarter. We don't have the second quarter figures yet, but the forecast is showing that the decline could be as much as negative 8%. Perhaps another negative quarter, but the forecast is then showing a recovery in GDP growth into 2021. This is the US figures. Unemployment in US spiked up 14.7%. It has dropped back a little bit over the last couple of months, and with the US pretty much reopening their economy, the unemployment rate, according to this forecast, is expected to decrease over the next few months. The US GDP rate, we don't have the figure for the second quarter yet. Some of the forecasts previously were showing it could be in the range of negative 15 to negative 20%. But again, with the economy reopening in the US, the forecast is showing that GDP growth to rebound fairly strongly. Turning now to the markets, this is the ASX 200, the Australian share market. It's a 5-year chart. And you can see this red line here shows a very significant correction that started in February with the impact of the pandemic. And then we've had somewhat of a recovery, and the market's now been sitting around 6,000 points, plus or minus 100 points for 2 or 3 weeks now. This is a volatility. It's a measure of fear in the market, and it did spike up quite high, above 50%, which is quite high by historical standards. Typically volatilities, around 15 to 20%, and you can see that as things have settled down in Australia and the pandemic has been managed reasonably well, the volatility of the markets has actually declined back more towards normal levels. This is the US chart, the S&P 500, so the broader share market index. Again, you see it's a 5-year chart. Very significant correction, but then also a quite significant recovery in the US as well. A lot of tech stocks in the US have actually done very well this year, despite the impact of the pandemic, and that's driven some of the gains in the US. This is the Australian yield curve. This dotted orange line here represents the yield curve 6 months ago, before the start of the pandemic, and you could see that the short-term rates were around 0.8%. The 10-year rate sitting at about 1.3%, with the Reserve Bank intervening into the markets, driving interest rates lower. This blue line here represents the yield curve now, and so you can see short-term rates at about 0.25%. The official cash rate's 0.25%. 10-year bond rate sitting at around 0.9% at the moment. So just to be clear, 0.9% is the return you would get if you invest in Australian bond for 10 years as of today. So those rates are at quite low levels. We're seeing people in the office now. You feel free to ring, make an appointment. I've also got the email addresses there. So there we have is an update. Please take care. If you've got any questions, of course, please feel free to give us a call, send us an email, and if you'd like to come in and see us, you're more than welcome as well. Thank you.